I don't think MicroStrategy has this risk, but I worry about the risk that Scott raises, which is in a significant pullback. This is a form of leverage entering the system. And during periods of stress, leverage turns into cascading selling. And I do worry a little bit about the sticking your head up higher than the next guy risk. As we get more and more of these, I think that that is a risk worth monitoring. And I think there's a lot of positive news in the Bitcoin market that just got lost amidst the distraction of the tariffs. So I don't know where we go in the next couple of days, but I'm pretty optimistic about where we go if this is the new normal, if we have banned recessions and we're back to risk on in the market. It is shocking to me. If I measure the number of investment bank pitches coming into my inbox, it's up not 2x, it's up 15x year over year. It's absolutely massive. Lots of companies for sale and a desire to grow. So I think it's a really big theme.
Matt Hougan begins by noting a significant and rapid upswing across all digital assets. Bitcoin, Ethereum, and altcoins have all surged in value. But this isn't just a random rally. Hougan suggests the market is essentially a coiled spring, ready to explode due to months of overlooked good news. He argues that while negative headlines like the tariff drama dominated investor attention, the crypto space was quietly accumulating positive developments.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Altcoins went up. I also think it's the case, Scott, that we suppressed and looked past a huge amount of good news over the last couple of months because we were distracted by this negative event on the tariff side. And so I think there's a coiled spring element that you saw in ETH's rally. Like ETH had a lot of actual good news. It had a reorientation of the foundation. It had some positive talk about its development roadmap. It had the Petra upgrade, and it did nothing. And then it was released, and it's up 40. And I think that's true even of Bitcoin. I think there's a lot of positive news in the Bitcoin market that just got lost amidst the distraction of the tariff. So I don't know where we go in the next couple of days, but I'm pretty optimistic about where we go if this is the new normal, if we have banned recessions and we're back to risk on in the market. So I think this is a good deal, a good thing. I don't think MicroStrategy has this risk, but I worry about the risk that Scott raises, which is in a significant pullback. This is a form of leverage entering the system. And during periods of stress, leverage turns into cascading selling. And I do worry a little bit about the sticking your head up higher than the next guy risk. As we get more and more of these, I think that that is a risk worth monitoring. It's not a risk we see in the market yet, Tillman, but it is a theoretical risk that we could see if we get an infinite number of these. But for now, it's absolutely true that companies are buying more than 100% of the supply of Bitcoin, right? And that is a good thing for price. That's one of the reasons we're up so much. And I suspect that that's going to continue, right? We think companies will buy 300 to 500,000 Bitcoin this year, right? Yeah, so 2 to 3x. So I think it's positive, but there is this potential risk you can see down the road if you want to look. It's already exploding behind the scenes. The number of M&A conversations, the number of pitches that come into my inbox. This is already happening at the crypto to crypto level. And then I think there are two other unlocks that you spoke of. One is crypto companies going public and then having a lot of cash. We're going to see a dozen crypto companies go public in the next year.
Isn't Galaxy going public next week?
Basically today, yeah, one of these days. And they're just the tip of the iceberg. I really think you'll see more than 12 go public in the relative near term. And then it's traditional companies buying their way into crypto because they have to. So you're going to see a massive wave of M&A, and that will cycle back into new VC funding. I think it's a really big deal. I mean, it is shocking to me. If I measure the number of investment bank pitches coming into my inbox, it's up not 2x, it's up 15x year over year. It's absolutely massive. Lots of companies for sale and a desire to grow. So I think it's a really big theme. I think it's happening at a much greater degree than people are feeling. There's almost a boil the frog element. We just skipped over a news story that said Robinhood chose to enter a new country by buying a crypto exchange, right? A week ago, Robinhood said it was building a brokerage to trade US stocks for European investors on Arbitrum or Solana, and no one even tweeted about it. Right, like these changes are happening so fast and so frequent that we sort of like shrug, like, oh yeah, great, of course they would enter a new country crypto first, right? That is incredible. Think about that headline 2 years ago. We would have been talking about it for months. And so I do think this is going to happen a lot faster than people think. I don't think it's priced into the assets. I think it's a bigger deal than people recognize right now. I do think there'll be more creativity in this space. I think you'll see different companies do different things. So I think this trend will continue. It's just always, maybe Scott and I are a little bit scarred from the last bear market. It's always remembering the lessons of history so we don't repeat them. And this is something we look at closely at Bitwise, and we look at the terms of the debt. We look at, will they be forced to sell? And we don't see any risk right now. It's wild. It is wild. It's completely wild. It's also true that crypto spent like 2 years building incredible infrastructure, but not having market penetration because we were shut down by regulators. So there is this reason we can grow faster and reason more things can happen. We couldn't have had this activity a few years ago where you'd have the ETH transaction fee spike to 30, but we're not in that world anymore. We've built the infrastructure to scale. It's an amazing market. It's been a long time since we'd had innovation in the financial services space that affects most people, right? Like, we haven't changed since the ATM. It's about time. So it's good to see them moving in that direction. I really think they're going to shake things up significantly over the next couple of years.
But Hougan also offers a deeper hypothesis. He notes the exponential rise in Bitcoin's hash rate, which suggests that large, well-capitalized entities are entering the mining space. These may be sovereign actors, mining Bitcoin not for immediate profit, but to accumulate it quietly without sending buy signals to the open market. While there's no hard data to confirm this, the circumstantial evidence, rising hash rates, subdued open market activity, and persistent accumulation suggests that very large players may be involved.
Gold is skyrocketing in price for good reason. It's been a store of value for centuries. If you look at gold and you look back in Roman times, I think the measure is it would buy you a certain number of loaves of bread, 1 ounce of gold. Well, flash forward to today, and it will buy you the same number of loaves of bread today, roughly, or a nice toga or a really nice suit in the early 1900s, and now it'll buy you a custom suit in today's day and age. So, gold has been a very good store of value, meaning if you work hard and you get money, you want to store it in something other than a good or service, and buying something, then gold has been a great asset to have to do that for good reason. And so what you're seeing today is a rise in the price of gold as investors are worried about the uncertainty in the market. They're worried about the uncertainty of the tariffs and the tariff war that Trump kind of started here, or he's pushing for some more fair treatment across border, and incentivizing companies to bring manufacturing home and all that. But just put that aside, there's a lot of uncertainty around it, even through this weekend and into this week, with Trump saying that they're coming to the table. They've struck a deal with China that's temporary. They're looking for ways to iron all these tariff questions out. So the question then for the market is, how impactful is it going to be on our economy? Is it going to be really inflationary? Is it going to cause problems with supply chains? Is it going to cause problems for companies that they're going to have layoffs because they can't pass through costs, the import costs and those tariffs onto their customers? And so those are the questions that people are asking and investors are concerned about. And so they have over the last month the last 6 or 8 weeks, they were taking risk off the table. You saw the stock market draw down 20%. You saw Bitcoin draw down significantly, 30+%. And you also at the same time saw the yields of treasuries all over the map and the US dollar falling sharply. So people were seeking a safe haven with gold, and it makes sense. Now you have this situation where you've got Bitcoin, which has also been rising rapidly. It started rising before the stock market started recovering. It started rising before you had these the latest round of headlines that are saying that the risk is coming off the table, meaning the uncertainty is coming off the table. There's a little bit more confidence in this process that Trump isn't going to just blow up the economy, that he'll be closer to reasonable about it. And so you've seen Bitcoin kind of decouple from the market a little bit. Why would that happen? Well, part of it has to do with just liquidity. It leads liquidity quite a bit. We can talk about that in a second. But one of the big things is that Bitcoin is being adopted rapidly, and it's being put into treasuries, corporate treasuries, likely sovereign treasuries. And if you look at the hash rate of Bitcoin, it's been rising exponentially, which would suggest that you have extraordinarily large players who are mining Bitcoin at close to the price, or maybe even at a loss for them, depending on what their mining equipment is and their cost of energy is. And they're doing that because they want to own Bitcoin without signaling to the market, walking into the open market and buying it. That would likely be large sovereigns. We don't have any data or confirmation of that. It's just speculation, but that's what it would look like to me.
Matt Hougan sees all of this as part of a broader transformation in financial services. For decades, we've seen minimal innovation in how finance works for everyday people. Now with crypto, everything from payments to savings to investing is being reimagined. From new asset classes to entirely decentralized financial systems, this is more than a bull run. It's a technological revolution. Hougan believes we are just getting started, and the pace of change will only accelerate from here. Please like and subscribe.